Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. Last week I talked about going through a potential trading strategy that you can use on gold. So I'm going to do that in today's video. So this is going to be a gold trading strategy video, and it's going to be really simple and something that you can follow and backtest straight away. So looking at gold, it also works on other charts as well, but it works really well on gold. And what it basically is looking at areas of support and resistance and looking at a specific candlestick setup. And what that is just a very low ranging candle. And what I mean by that is just that something that stands out to you as a very small daily candlestick. Reason being is because gold is actually quite a volatile market. It's a very liquid market. We don't often see it range for too long, or we don't often see it not in an impulsive phase. And what we're trying to identify is when those impulsive phases can begin, and one thing that can give it away is a low ranging candlestick. And you can see I've just highlighted a few just in the sort of picture here on this chart, and we can see that what I've done is I've highlighted each sort of low ranging candlestick at a previous area of support or resistance. And then what we need to do is identify how we could potentially trade that going into the next day. So I'm going to start off with the first one. The first one is just through here, and it is around about the 20th of August. So that 20th of August close is a low daily ranging candlestick. More importantly, it's at a support level. So you can see that price has rallied from this support zone down through here, and it's finding support at previous structure. Now, what I like about this low daily ranging candlestick is the fact that it's come after a period of consolidation in the market, where you can see that we have multiple range bound candlesticks where price is closing back within each other's range on a number of occasions, and that usually is a sign that the selling momentum is not going to continue. Now, once the low daily range candlestick has formed, again, it's just a very, what you see visually as a small candlestick. What we want to do is see if the market will go into that impulsive phase. That's what we're trying to predict. We're trying to predict a big move in the market to come for the next day. It doesn't always happen, but there's quite a lot of times where it does happen. And you can see here, if we just take a quick look at the overall trades, you can see here there was a nice impulsive move after this one. Again here, nice impulsive move. Down through here, impulsive move. Here, a very impulsive move if we look at the whole kind of situation there. Sometimes we only get some small moves, but it's enough to try and take some positions in the market. Now, let's take the first one. Let's dive into it on a lower time frame. What I like to do is, once we've identified what the candlestick is doing on the daily time frame, what we're going to look for is a opportunity to buy it the next day. The reason why we're looking for it to buy, because we are looking at the daily candlestick and it's suggesting that the market is going to move back to the upside, okay? Because we're broken above this support level in here, we're retesting it, we have range and candlesticks through here, and then we've formed a low daily range, suggesting that the selling momentum is coming to an end. Now, if I go to the 15-minute time frame, and what I'm going to do is just go back to August 20th, and we can see I've marked out the area where we can start looking for the potential opportunities going into the next day. So we'll just go all the way back. Let's just scroll through. This might take us a second or so, and then we'll look at the most recent ones after this one, but we're getting there. Right, so on the 20th of August then, let's just zoom out a little bit. You can see that the price has traded within a, let's just say, a 100 pip range. Okay, so we've traded within a 100 pip range, causing that low daily range candlestick. So we're looking for long opportunities going into the next day. Now, what I particularly look for when price does this is a breakout of the high of that candlestick. Now, the break of the high is basically showing us that the market could potentially move to the upside because we've taken out the high of that particular candlestick, and the high was around about 1788. Okay, now when price breaks out of this candlestick, what I'm looking for is either a breakout pattern where we can look for a long opportunity on the break and close above the zone, or we want to look for a break and retest. Now we often see gold just rally, so we don't often get the retest. That's why I'm saying looking for a breakout as well, because if I actually look at this move here and I just drag a line across, we have a very familiar pattern where price rallies up, hits the level, comes back, and we make a higher low before the breakout, okay, before the previous sort of high or the daily high there. Now that is basically showing us that despite price finding resistance at this level, we are still making higher lows. Okay, this is a very common trading pattern. It's almost like a triangular sort of flag pattern as well, some people might say. So what we're looking for then is the market to extend and give us a significant close above this high, which would actually be this candlestick here at 1:15 in this instance. So what I would be looking for on this candlestick through there is my buying opportunity. So I will then set an order above this candlestick high. My stop loss then is going to go under the previous swing lows or under an area you feel comfortable with your trade. So you could look at below this swing low here. If you don't feel comfortable with that, you can put it below this major swing low just through there. Now what we have here is around about a 70 or 67 pip stop loss, and you can see that price has rallied up 150 pips there. So that would be our day trade there, looking for that buy as price breaks out of that high. Let's go look at the most recent examples. So the really good example that we actually pointed out in one of the Blueberry market trading videos was this particular move down here on the Monday. So what you can see is often these small low ranging candles can form on a Monday for gold, and this one in particular was something that we discussed in a previous video, I believe. And we can see here that price has formed a low daily ranging candlestick after retesting support. So the market has broken through. Okay, trend analysis all saying that price is moving potentially to the upside, and our target was around about 1800 for this move up. Price has then formed a low daily ranging candlestick. So after sort of all this price movement, this is the smallest candlestick since this one back in around about the 6th of September. So this one here on the 11th of October is the lowest daily range since that candlestick. And what we can see here is, again, price breaks above the high and we get the extension into the next day. So if I actually go into the 15-minute time frame and we go all the way back to this particular trade opportunity on gold, you can see that if I actually just zoom out a little bit, and what I'm going to do again is I'm going to drag a line from that daily high and I'm just going to drag it all the way over. Now what we're looking for again is a breakout of that area. Then what we're looking to do is put our stops below the significant lows. Okay, so you can see here price does start to break out to the upside in the morning. It's around about 8:30, that position through there. So what you would do is you would look to set a position above that swing high in here. Okay, now depending on spread or whatever, you may or may not get taken into that position, but if you did, you need to put your stop losses in an appropriate place. So on a low daily ranging candlestick, it can go below its previous swing low, which is down through here. It could go below a significant low, which could even be below the swing low or the daily low of the previous day. So you could even have quite a large stop loss on these low daily ranges, because in theory it's only 120 pips, and on gold that is a very low ranging day. And you can see here that price rallies up overall around about 380 pips from that point. It takes a while to get going. Actually, some news was the reason why price did end up rallying in the end, but from a technical position you could have been looking for that longer to move up. If you had taken a tighter stop option, you would have been stopped out on this position if you'd put your stop loss below that previous swing low. So again, depends on how you want to manage this position or look at the risk, but I would have entered again If we got stopped on that one, I would have entered again on the breakout of the high. So what I would have done is looked for a buy position here, stop losses below the swing lows, and looked for another move to the upside. Again, you could have put that then below the previous low here, and it'd pretty much be the exact same trade. Again, you've got another move through here, another low daily range and candlestick, suggesting that price could extend to the downside this time. If we zoom right in here, okay, I'll show you an example on a Forex chart in a second, but you can see here price has come back up into this resistance where we saw a lot of selling pressure, low daily range and candlestick. Could that offer you a trade going into the next day? Well, if we look at that 15-minute, we already know, and we can see that price started to push back to the downside. But how would you particularly enter this market? Well, if you look at the breakout of the previous daily low, what you're going to do is see that price rejects it initially, but then closes below. So your entry is going to be this close below here. Okay, just below this candlestick. Your stop loss is going to go above significant highs, remember, so you're either going to go above this swing high, if it'll let me clone this up, this swing high here, but that's quite a tight stop loss. I'd personally go a little bit higher, perhaps above these highs or even this high just through here, because that's the Asia range high, so that's plenty of room. So you can see that's around about 110 pips, and the market moves around about 250 to the downside. So some great opportunities when using this simple gold strategy. It's not, like I said, just for gold. I really like looking at this particular candlestick pattern across the pairs when I look at strength and weakness. One of the markets that we could have looked at today was dollar yen. Dollar yen created a low daily range candlestick. Usually they are inside candles as well, so keep an eye out for that. It's not all the time, but sometimes they can be inside candlesticks. And if you look, it's at the previous highs. What we can see here today is that price broke above the previous structure high just here. So that would have been your entry if you were around at that time. If not, you could have looked at the retest on this particular pattern and could have looked for your long position through there. But essentially it's broken out of the previous day's high. Stop loss could be in this position. Look for a move to the upside. So I hope you enjoyed this strategy video. You can use this for a Forex trading strategy. You can use it as a gold trading strategy. Take a little look at this, go and have a little back test. Hope you enjoyed the video, hope you fully understood it, and if you did, leave it a thumbs up, subscribe to the YouTube channel to see some more of our Forex content, and I'll speak to you in the next video.